I'm Chimgozirim Nwokoma, and you're watching Equity Merchants. Nigeria's capital market shapes how businesses raise money and how investors build wealth, yet it remains a mystery to many. Behind the scenes are registrars, quiet operators who keep shareholder records, manage dividends, and make sure investors actually see the returns they are owed. But how well is the market really serving shareholders? Why do unclaimed dividends remain such a stubborn problem, and can technology finally close that gap? Augustina Obi, Head, Registrar Services at Coronation Registrars Limited, walks us through the role registrars play in Nigeria's financial ecosystem and what can be done to make the market work better for everyday investors. For someone who has never heard of capital markets or who is not very familiar with the capital markets, how would you describe the capital markets to that person?
Interesting question. So the Nigerian capital markets, I would like to say Nigerian capital market because we are in Nigeria. Yeah. Okay, so Nigerian capital markets is all about a financial marketplace where buy and sell of securities like bonds and equities happen, right? So this is a market where companies and governments go to raise funds for financial growth. Maybe they want to expand their businesses or execute some projects. They go into the market, offer their securities as shares and bonds to the public to buy into, and the capital that has been raised from it, they use it to do all of those executions of projects or even expand their business for cases of companies. So what happens in this market is that some people have excess funds to push out to the public, and those are called investors. So if I'm an investor and I feel I have excess funds, I push it out to companies or governments that need it, and the companies use those funds and expand their businesses, or for government, for instance, use it to build infrastructures like schools, hospitals, and the likes. So that way, it kind of grows the economic, it fuels the economic growth. Because when that happens, capitals are raised, businesses are expanded, projects are executed. So when that happens, it means that there's going to be job creation for the masses, right? Exactly. And businesses are expanded. So it's kind of a two-way thing. For investors, it grows wealth for them. They get returns for their investment. For companies and governments, it helps them to expand their businesses and execute projects.
Awesome. For registrars operate behind the scenes. Not a lot is known about what they do. So how would you describe what you do as a registrar?
As a registrar, I would say we are the custodians to companies' shares register. What do I mean? If a company A lists its shares in the Nigerian Stock Exchange, right? People come in and buy those shares, and they form the register of the company. So now there's someone or a middle person that is meant to manage that register. Before now, it used to be like something that happens within the company secretariat's desk. But as the market has grown over the years, it's no longer something the company secretary can manage alone. So the registrar would have to come and fill in that role because of the expansion of the capital market business or activities. So for capital market registrars, I would say we are record keepers, right? If I buy shares as an investor, I expect that the registrar will have my records updated in their records so that whenever I want to trade, I will be able to trade, and there won't be issues on reconciling if this is what I bought or this is what is reflecting. What I bought should be able to reflect as what I actually bought, and there shouldn't be issues about reconciliation or on my shares. Then another major thing we do is we execute corporate actions. What do I mean? Companies declare dividends when they make profits. Sometimes they feel like giving out bonuses to their shareholders, especially when they make profits. Sometimes in trying to raise capital, they do what is called rights issues. That applies to existing shareholders only, right? So when this happens, the registrars are expected to ensure that those dividends that the company has declared gets to the shareholders as at when due, right? Okay. Yeah, so shareholders will get to receive their dividend as at the date the company has announced would be the payment date. For bonuses and right issues, registrars also ensures that the allocated units or the subscribed units of these shareholders are credited to their CSCS accounts as at when due. So that is another big function of the registrars. Another one is registrars organize meetings for their clients, especially the statutory annual general meetings of clients, extraordinary general meetings, and court-ordered meetings or the likes. So registrars organize working together with the company secretary, organize those meetings, officiate at the meetings, and also help in pool elections if there is need to do an election during the meeting. Also very vital, updates. Sometimes people get married, people divorce, people die, and their information needs to be updated in the register of members. So shareholders will need to walk forward to the registrar to say, I need to change my name because I'm now married from this to this. And registrars own that responsibility of ensuring that the register of the shareholders are updated with the correct or current information. I think basically, then another important thing I do not want to miss is the cases of share dematerialization. So in the past, during days of public offers, when you get a share certificate to show your proof of ownership, right, that you are now a shareholder in the company. So registrars help to do that transfer of physical certificate to digital form. So they do that and make sure that the shareholders' certificate are being dematerialized and have it credited to their CSS account. That way, it would enable them to trade on their shares whenever they want to. But if those shares are not dematerialized, they will not be able, they will just remain in the register of members, but they cannot trade on those shares whenever they would like to. So these, I think, are the most important rules of the registrar in the capital market.
So in your opinion, how well would you say the Nigerian capital market, and I guess the registrars as well, how well do you think they serve retail investors?
Well, the Nigerian capital markets have done well. They are not there, or we are not there yet, because I'm an operator as well. We're not there yet, but there have been some major changes or major improvements in serving the retail investors. Number one would be in the aspect of electronic dividend payment, right? So before now, dividends would be posted to shareholders, that's paper dividends to shareholders. Sometimes it doesn't even get to them, or maybe by the time it gets to them, it would have expired, that they will need to come into the registrar's office to revalidate those dividends. But registrars, in collaboration with the Securities and Exchange Commission and the NIPS, Nigerian Interbank Settlement System, have come up with an e-dividend platform called the EDMMS, right, where shareholders can easily go, is an online self-service platform where you can go to, fill out the form, and it goes to the registrars that you have bought shares with. So when it gets there, the registrars, what they do is to process those requests and make sure your dividend your dividend payments are credited directly to your bank account as at when due, right? That's a big improvement to compare to what it used to be in the past. Some people even get lost of their records of their dividends. They don't even know when companies or even the registrars that are the custodians to that particular shares they've invested in. So that's a big one for the capital market. Another thing is in the area of digitalization, right? These days, I don't need to visit a broker to initiate a buy or a sell mandate like it used to be in the past. So with my phone, if I have the trading app of the stockbroker, I can initiate to buy stocks or to sell at the comfort of my home. So that, I think, is also a big one, a big improvement. Then another one is investor education. There have been some strong awareness, right, by the registrars through digital channels like emails, phone calls, and text messages, right, to shareholders, creating awareness on what the market is like, educating them through webinars on what the market works like and how to, that helps them to at least have an understanding of what the capital market is like and help them to make informed decision when necessary.
Awesome. So we often use capital markets, financial markets interchangeably. Is there any difference between both of them, and what are those differences?
Not exactly, but let me explain what it looks like. So financial markets is like the umbrella for trades, right, where buys and sales happens. Now, capital markets is a kind of an arm inside financial markets. However, capital markets is more like a medium to long-term investment. So, for example, if company A issues or lists their shares on the Nigerian Exchange Group and their shares are bought and registered, right, and I buy into that shares, what it then means is that that shares is a long-term investment already. But on the other hand, if the government issues what is it called? TB, treasury bills, yes. So treasury bills is more like a money market because it's the life span is short. It's usually for maybe 160 days, 250 days, depending on what is out at that moment. So it's short term. So, but the distinction is this: capital markets, all capital markets are all financial markets, but not all financial markets are capital markets. So capital markets is more like medium to long-term investment, whereas financial markets houses everything from short-term to long-term investment. So it's like the father of the market, if I should use that word here.
That's a good distinction. Unclaimed dividend. We've had issues where people probably bought shares like a couple years back, and they lost track of it for some reason, and now perhaps they are like they want to get back those shares, or maybe they don't even know that they still have those shares. But we've seen some efforts by like capital market operators to at least help people reclaim some of those dividends. Right. Why do you think it has been a problem for this long, and what can be done about it?
Okay, so unclaimed dividend, like you rightly said, it has been an issue in the capital markets, right? Like a pain to shareholders, because in the past, majorly in the past, especially in the days of public offer, right? A lot of things have not been digitalized. So people kind of buy those shares for the sake of buying. Some people don't even have any idea of what those things are or what they look, not what they look like, but what it entails, right? You just buy because maybe your neighbor told you that he bought Access Bank shares and you too, you want to be among that group, you go and buy. So now, after you have bought the shares and the company pays dividend, your address registered on your application form is where the dividend is supposed to go to, right? That was in the past, even though, like I said earlier, that era has been faced. So right now, let's even focus on the present. But then I will still need to make reference in because most of the issues we have right now are legacy issues. Some people bought shares at those periods and their father or a friend signed for them on the application form without knowing the implication of that, right? Because if you walk into my office to say, I am so person, I need to claim my dividends, I would ask for your name and some other things, but I will have to verify your signature to be sure that the signature you appended on your application form as at the time you made the purchase, right, tallies with what you are giving to me. And if it doesn't happen, I will not be able to release that because it's already like a compromised information or data, if I should use that word. So now, because of that, you are asked to get one or two documents to regularize before your dividends can be paid. And in doing that, it can be frustrating, right? But at the same time, we have it as a duty to safeguard investments of shareholders, right? So until I'm satisfied with the information I need to ascertain that this is yours, I will not be paying you that dividend. So that is one. Then two, shareholders in the past as well use fictitious names to buy shares because they want to accumulate. You know, there is a rule that one person is not meant to have like different shares in the same company, right? So in order to secure enough for yourself, you don't go and use fictitious names that do not exist to buy those shares. So it becomes a problem because you need to clear those checks. And when that is not possible, when you don't have a living human being with that name, so to say, it becomes a problem to claim those dividends. So in frustration, they leave it behind, right? And but even though SEC came out with something that can be done to be able to claim those dividends of fictitious names, and they keep extending the deadline, right? Still, many people have not been able to do that. Yes, but some people who are aware have been able to do that as well. Then there are cases of name mismatch. My name is Augustina Obi, for instance, with the registrar. I used Augustina Obi to buy my shares. Meanwhile, at my bank, my name is Maduka Augustina. So when it's time for payment, because it matches name for name, right? So when it's time for payment, the bank returns it as a name mismatch. It cannot pay. So those dividends remain unclaimed. Another thing is cases of bank being dormant. There are instances where shareholders' accounts are no longer valid at their banks. And when you push those dividends to the bank for payment, it returns. It comes back as dormant accounts or invalid accounts. So I can go on and on and on. The list is quite exhaustive. So those are the issues that shareholders have with claiming their dividends in the past, or even presently, not just in the past, presently as well.
Okay. So this looks like, at least just looking forward, this looks like some of the issues that technology can help to resolve. So in what ways have technology shaped the registrar business in recent years?
Interesting question. So I think we can all agree that technology is a game changer, right? And with technology, a lot of things have improved in our businesses, in every sphere of life, so to say. So for the registrar business, for example, technology has done a lot of has created a lot of impacts in the way we manage our shareholders' expectations. Take, for example, in the area of claiming dividends, right? In the past, you just have to get a paper dividend that you would take to the bank and clear. But now, dividends are paid directly into your bank account because technology has made it easy that you just go to a self-service portal, fill out your information, and your request lands on the registrar's desk to process your dividends into your bank account. I think that's a big one for the industry because it has taken away frustration of traveling all the way interstate everywhere just to come to the registrar to come and make a request claim dividends in the past. So that's one. Then the second one is in the area of investor education. Okay, so many people that bought shares in the past do not really understand what shares is all about, like I've said before. But through channels like webinar presentation, publications on papers, emails, notification, there are a lot of ways that the registrars have been able to reach out to shareholders to educate them on what the capital market is all about and what their rights are in the capital market and how to help them make informed decisions, regularize whatsoever that they may not have been aware of in the past, right? So that is another one. Then the digitalization in form of portals. For example, I can trade my shares using a company's digital app, right? From the comfort of my home. I don't need to do frequent visitations to either the registrar or the stockbroker, whomever. If I have that company's trading app, I can just use it and trade my shares. I can monitor my shares too through the registrar's application, either online or through my phone, right? I get to see what has happened or what is happening on my shares, the status, view reports, and every other thing, every other information are made available on that application either the digital application on your phone or the online website. So these are ways that technologies have helped to improve the services that we render to our shareholders. And I know we're not there yet, but it's a step in the right direction.
Okay, so finally, the new Investments and Securities Act has introduced a few changes that affect registrars. I think I want us to focus on two major aspects. One is unclaimed dividends, and then the second is just digital assets. Can you just share how the new act influences how these two issues are treated?
All right. So in the case of unclaimed dividends, the Investment and Securities Act 2025 has reaffirmed that every unclaimed dividend that are above 6 years, yes, from the time of declaration, would have to be paid into an unclaimed dividend trust fund and to be strictly managed by the Securities and Exchange Commission. So what this means for us, the registrars, is that we would have to return all of those unclaimed dividends or any unclaimed dividend that is 6 years from the time of declaration. You would have to return it, or rather pay it into the unclaimed dividend trust fund, right? That way, the Securities and Exchange Commission takes it up from there and help to operationalize ways for shareholders to claim this dividend. It's more like to show transparency and also to restore investor confidence. Then what it means for shareholders as well is that for those of them who may have forgotten their dividends or that they even have shares, right, it gives them that opportunity to claim their dividends, because these monies are not lost. You know why it's like that? Because before now, there was a rule that dividends that are 12 years and above after declaration returns to the paying company. Right. So if a shareholder walks forward to me as a registrar to claim such dividends, I will tell the registrar that I've returned those dividends to the paying companies. It's no longer in my custody, and there is no way I can get the money to pay the shareholders. So it was a thing of pain for those shareholders in the past. But with this new act, it has kind of restored confidence and trust to these shareholders. So if I had a pain, or if I was displeased in the past with the former, this would encourage me to even invest more and even introduce people into the capital market, knowing that whenever, anywhere, or any day I decide to, go for my past dividends, my money is always there for me. My return on investment doesn't just go down the drain. It's always there for me. So this is a very interesting one for that the Act has made it very interesting for shareholders, I would say, and also for the market, because when things like this happens, it gives the avenue for more participation in the capital markets. Then for the digital assets, before now, securities that are recognized for trading in the capital markets are, shares and bonds per se, right? Digital assets like cryptocurrencies, tokenized assets, the Act has now recognized them as securities to be traded, meaning that the issuers of those assets will now fall under the purview of Securities and Exchange Commission, and they will have to comply with the rules and the regulations. So this is more like, should I call it inclusion, and also more of expanding securities available for trade. And I know that this way too, a lot of people would have to come into the market, because it's going to kind of broaden the capital market activities. So it's no longer limited to trading stocks and bonds. You can also trade cryptocurrencies, the likes of Bitcoin, and real world assets like real estate properties, have to be traded. So I think those are the major changes that affect major impacts or major changes of the Investment and Securities Act 2025. And for registrars, it kind of impacts us in a way such that we have to be highly compliant with these new responsibilities, because SEC follows through, and you have to comply with what the authorities have said. So it keeps us on our toes, and on the other way, it would also help us to work smarter and faster, also to recognize this other side of investment or securities being introduced into the capital market.